Good morning, everybody. Welcome to our Thursday Q&A call. We've got Ross van Coller, our analyst on British American Tobacco. He's going to be sharing some insights into the company. And then Sean's going to do a technical bit for us, and then we'll throw the floor open for questions and answers. Hopefully we can answer all your questions. Please type them in the chat as we go along if you wish. Otherwise, you can just ask them outright when we do get to that section. We appreciate your participation and look forward to answering your questions. Thanks for joining us. I'm going to hand straight over to Ross.
Great. Can you hear me? Can you see me? Can you see my presentation?
Yes, we can.
Okay, and if I change it, does it change?
Yes.
Perfect. Okay. Good morning, everyone. Thank you for joining us again for one of these Thursday calls. My name, as Cyril said, is Ross van Coller. I cover local and offshore consumer staples as well as healthcare, but today we'll be talking tobacco with British American Tobacco. We did touch on this earlier in the year, and not much has changed since then. They've had one trading update. The first half of the year results will be coming out in the next few weeks. But basically, to touch on what is topical in this industry is essentially, as we all know, cigarettes are in perpetual decline. The volumes traded for cigarettes are down about 3 to 5% in annum, depending on which markets. But in the US, that's sort of the going average. Recently, that it was a little bit higher than that, which was of concern. But it seems to be people switching over to other nicotine products, mainly vapes, as well as a few other products, which I'll touch on in a moment. As far as valuation goes, stock is cheap. It has been cheap for a while. So it's been trading a little bit sideways for the better part of a year now. So any sort of non-bad news could be a bit of a catalyst for the stock, but we are monitoring it closely. Just to touch on what happened at the end of last year, because there was a bit of news that came across with that. I started the cigarette business. Essentially, they impaired their Reynolds American acquisition, which they acquired in, I think it was 2016, 2017, for about $50 billion US. And essentially, they have impaired that by half, so $25 million US, and they are going to amortize that over the next 30 years, essentially seeing it as in 30 years that asset might not exist, the way the cigarette sales are going. And then the other thing was their sale of their ITC business, or a part of their stake in the ITC business, which I'll also touch on a little bit later. But essentially, they've had this long-term shareholding in a company in India, which used to be called Indian Tobacco Company. It's now just called ITC. And they had just under 30% stake in that, which they reduced to just over 25. So they generated about $2 billion in cash, which they can use to pay down their debts, which I'll also touch on. We do have an upside 25% buy. And in my previous presentation a couple of months ago, I mentioned easy wins. These are now become previous easy wins because they have addressed a couple of these. One being a change of listing from the London Stock Exchange to New York, just a lot more liquid markets, and they're big enough to be included in the indexes, which would generate a lot of passive inflows. They have come out and said that they're not going to do that. So that is no longer an easy win as far as we see it. I mentioned the partial stake of the sale in RTC, which they announced in February. That caused about a 5-6% rally in the share price. And then I mentioned share buybacks. They paused this for a while, and they have resumed them. It started at the beginning of the year. It's going to continue throughout the rest of this year and the rest of next year. Essentially, they'll just be buying back shares at these low prices. In total, it's going to be about £2 billion, 700 million of which will be this year. And we see this every day. They send out announcements of how it's going. So yeah, as your share capital reduces, your per share earnings goes up. So we see that as quite a nice positive. I'm going to jump over this quickly because the topical thing is next generation products or risk reducing products, as some people like to compare it to. So essentially, there's three categories here. You've got your heated tobacco products, you've got your vapes, and you've got your modern oral. And these are just the two from the main two cigarette players. This is your tobacco heater product. We all know what vapes are. We see them all around us every day. And then this is their modern oral solution, which especially Philip Morris is seeing massive, massive growth in 80% year on year for the last 4 years. So keep a look out for these. You'll probably see them. You already see them in all the engines around the country. Just to touch on market share. So this is a mainly US market share. That's British American Tobacco's main operating domicile. You can see that they've had steady growth in market share across all these categories, other than modern oral, which in 2021 peaked at just under 35% and then has been declining. And that's due to Philip Morris entering the fray with their acquisition of Swedish Match Company. So they brought in their own modern oral. That's the Zyn that I just showed you before. And that's taking market share away from BATS. And then the only concerning thing would be the tobacco heated products, which saw a slight downtick in 2023. The big issue that both them and Philip Morris are facing are illicit vapes, which are basically imported vapes mainly from China, which are not regulated at the same standard as normal vapes, so they're also cheaper to make. So the oils in these products could be more harmful than what they are stating. And at the top, you've just got the shift of the demographics of how people are smoking. So back in 2014, you had a total of about 13.5 million people. This is over the age of 21 legal smokers. So it won't obviously capture the whole market. This is all in the US. And about 4.4 million of those were vapers who don't smoke cigarettes. If you fast forward all the way to 2023, you can see that the total number has increased to about 16.5 million, with the majority being made up of vapers. So definitely a shift in trend over the last decade to people being able to vape. A lot of people vape indoors, some things you can't do when you smoke. And then at the bottom is just highlighting how the Chinese are managing to get around all the regulation. And it is as simple as a name change. It started off as Alpha Bar, became EB Design and EB Create. And each iteration of those was then banned by the FDA. They sort of started locking them down at the ports, and then all the Chinese did was change the name. And that seemed to do the trick, and they started getting through again. So it has been quite topical, especially up into this election year. So hopefully we can see some more action from the FDA with regards to these vapes, because it is hurting both BATS and Philip Morris. Estimated sales of illicit vapes are 60%, 60% of all vape sales are illicit vapes. So obviously taking a bit of market share away from them. This is just a breakdown of BATS and Philip Morris. You can see that Philip Morris is quite a way ahead of BATS in going into the smokeless world, as they say. Philip Morris wants to get to about 50% by 2030. And BATS has the same target, but for 2035. So Philip Morris is about 40% of all revenue comes from next generation products, where BATS is still about 15%. So they've got a bit of catching up to do, but they obviously have the biggest cigarette market. So if they just offset the volume decreases with price increases, you can expect that that blue line, blue charts on the left to remain pretty steady. Just to quickly touch on their debt profile, because it was quite a topical thing about 8 years ago. You can see it spiked in 2017 after they acquired Reynolds American. And that raised their net debt to EBITDA to just under 6 times, which is quite hefty. Ideally, you look for anything below 3.5, 3 times to show balance sheet resilience. And recently, up until the end of last year, they got it down to about 2.57. So their target was 2.5, so it missed it a little bit. But by the end of this year, we should see that number closer to 2.25 times, at which point they say they'll return money to shareholders. When you look at their high dividend yield and their share buybacks at the moment, they do a pretty good job of that. So anything on top of that will obviously be a positive. But as far as their debt goes, not much of it is due anytime soon. The majority of that debt is long-term dated, post 2034, so 10 years plus. So for us, it's not too much of an issue, but it is quite a common talking point on all of these calls. As I mentioned before, this was something that was seen as a bit of a catalyst. Essentially, BATS has held the stake in this Indian tobacco company, which is now called RTC, and it actually isn't a tobacco company anymore. It's a conglomerate of multiple different industries. And if you look back to 10 years ago, the market caps were quite different. But if you fast forward to now, they're almost traded at exactly the same point. So BATS, with that 29% stake at the beginning of the year in this company, it represented over 30% of the entire market cap was in their stake in RTC. So they have sold it down to just over 25%, which generated some nice cash. They probably won't sell anymore because they want to have voting control, and voting control is at 25%. So they're happy with their stake. They don't want to get rid of it. I think they see it as quite a nice hedge and a diversification to the business. But it is just quite interesting to see the two trajectories of the two companies. I just want to do a quick comparison here. Sorry for the clumsiness of this chart, but essentially the top is your price return. The second chart is, the second table is your total return. Because often we look at the trending movements of BATS going sideways and down, but it doesn't count for the dividends that this company pays. They pay a 10% dividend, which normally comes in quarters and semi-annual. So, I mean, if you look at over a 1-year period on a price return, you lost about 6%. But if you include the dividends into that, you got a 5% positive return. So it is one of the nice points of this company. Other than being a rand hedge, you get a nice chunky dividend a couple of times a year. And then at the bottom, I've just got their peers. At the top, you got BATS, then Philip Morris, then Japan Tobacco and Imperial Brands. All very similar businesses operating slightly different markets. But if you just look at the PEs, if you compare BATS to its main competitor being Philip Morris, you're trading at less than half the price to earnings ratio. So we do see a nice margin of safety and pointing to the upside for BATS. So at a 6.5 PE on a 10% dividend yield, you have a nice, I wouldn't say safe asset, but a conservative slow grower. I'll just jump over this quickly. This is in my report if you want to have a look at it. Just essentially how we get to our valuation. It's a forward EBITDA with a multiple, stripping out the net debt, and then base weighting it to a bull and a bear case. So even with the 30% to the bear side, you still get a 25.5% upside to its current share price. This is just quite a nice little chart that one of my colleagues made on the left. Just shows the averages and history compared to peers. It's just another way of putting that table that I just showed you. And then on the right, it's just a statistical calculation of the best trend that will follow the share price to its earnings. So you can see in January, in about 2018, nothing changed from an earnings point of view, but the share price came down quite materially. So this is one of the very few companies where its earnings have consistently grown, but its share price has gone in the other direction. So there's quite a big gap between those two. So as we said, it won't take much to just get a bit of return on the share price. And then I'll just finish it off with these are just their long-term multiples. So at the top, you've got the 10-year, bottom, you've got the 5-year, and then the standard deviations. And in both situations, trading well below it's one minus one standard deviation, one standard deviation below the mean. So yeah, as I said, won't take much, just a little bit of less bad news. And I want to turn over to Sean for the technicals before I answer any questions.
Yeah, good morning, everybody. Yeah, you can see the chart there of the daily chart of British American Tobacco. It shows that the share price is trading just above its, this is until yesterday's close, above its 21 and 50-day moving averages, as well as its 200-day moving average. So I'm calling the medium and long-term trends still bullish. But you can also see there, and Ross did allude to it now, the share has been moving sideways in a trendless range since December. And if you load up more data, it actually goes right back to 2019. So it's been going sideways for quite a while. So the upper resistance level of this trading range is 722. And then I think the next one down from there was 644. And then we have 529. And at 529, you can see there's the previous support now called resistance. So that'll be a important resistance level to overcome. On the downside, you can see the lower support there at 550. And then further down at 523. Right at the bottom, you can see the MACD indicator. It is trading just in overbought territory and above its signal line. So it's still very bullish with no clear bearish signals yet. So the way I see it, it's an opportunity now to nibble at these shares, this share at this levels. As Ross said, we've got a buy recommendation. And with intrinsic value far above that at 721. And that's it. That's how I see the chart. Thank you.
Thank you, Sean and Ross. Yeah, I agree with Sean. This thing's very, very sideways, but I think Ross summarized it perfectly in saying that if you want a conservative dividend payer, then you have to include BATS in your portfolio. And the other thing about BATS is it's a good rand edge, guys. So if you are of the opinion that the rand's going to deteriorate again after the optimism we saw straight after the government of national unity was announced, then another reason to be exposed to something like a BATS where most of the earnings is coming from a different demographic and definitely not rand-based earnings. So as a rand edge, as a dividend payer, and as an undervalued stock, of 3 reasons to own it is my summary. Let's see if there are any questions from the audience. Nothing so far.
Sorry,
yeah.
Leo.
Yeah, go for it.
So the way I see it, or I understood it, is that if Ross expects the share price to go up 25%, because the investors are used to the high dividend yield, does it mean that, or does he think that the earnings and the dividends will go up by 25% in time? That's it.
Hi, Leo. Thanks for your question. So I look at the share price over and above dividends. So for me, the dividends is purely a bonus on top of that. If the share price goes up by 25%, your dividend yield will be lower. I don't think the dividend will go up that much. They do have a history of steady increases in the dividends, but it isn't tied exactly to the share price movements. So when I look at the share price, I'm looking at future cash flows into the business, and then sort of discounting it back, and just based on history and the way these guys are moving, they consistently making money, or from a bottom line perspective, making money. Their top line might go a little bit sideways, but as their market share and operating margins remain fairly high, the operating margin, I think, is at 45%, which is an industry high. If you can extract efficiencies from your process, and just from, let's say, them sorting out this illicit vape thing, you'll probably see a sideways tick in cigarette revenue, but then an increase in your NGP revenue, and that'll obviously filter down the income statement to your earnings. So your earnings won't necessarily go up by 25%, but I'm just saying that at these levels, it is extremely cheap. So just from a multiple re-rating, even if the earnings stay exactly where they are, just from the multiple rating changing, you'll get that hopefully 25% is where I see it. But yeah, the dividend, it's always been a big dividend payer. I don't think the dividends will get massive. I think they'll rather probably just move to share buybacks.
Thanks, Ross.
Thank you.
Yeah, thanks for the question, Leah. I hope that answers. Alex says, does BAT have its own vapes that it produces? I think he's talking specifically to recognize the brand. I mean, we all know the Philip Morris one at ICOS.
Yeah. Let me just, sorry. Yeah. So BAT has Vuse. So Vuse, we do get that Vuse in South Africa. I haven't seen Philip Morris's brands in South Africa. South Africa actually gets a lot of illicit vapes. The majority are illicit vapes, in fact. Vuse is the only real recognized one that, or popular mainstream one, that is used, and it's not a disposable. You get the little cartridges, and those are disposable, but the actual device itself is reusable. I think I might actually have, let me just check here. Okay, so yeah, these are they basically what BAT's products are. So if you look on the left there, those are the main products, and you will see some of those in South Africa. I've recently seen the Modern Oral Velo. They've got a store in Mall of Africa, in fact. And in tobacco heating, the tobacco heating product seems to be a lot bigger overseas. It's not so popular here, but their version is the Glow. But you'll definitely see Vuse wherever you at any tobacco shop you go to, with varying flavors and nicotine content. The other interesting thing I forgot to mention is that Reynolds American this week announced that they are releasing a nicotine-free vape, which doesn't need to go through FDA approval, so it can go straight into the mainstream. I'm not sure what the appeal of that is, since if you're going to smoke without nicotine, then you're not getting any nicotine hits, and you're just getting all the bad stuff. So remains to be seen.
It's like a Heineken Zero, Ross. It's pointless.
Yeah, exactly. Yeah.
Yeah, I agree with you.
Yeah. But yeah, sorry, to answer your question, Vuse. Vuse is the one you'll find in South Africa.
And that's the market they're trying to grow as they get rid of all the Camels and the Daniels and so on, as that market's deteriorating.
Yeah, it's definitely healthier. It's not healthy, but it's healthier.
Debatable,
yeah.
right?
I don't think there's enough data in the long term, but as things stand, that's where the science points us.
But I'll tell you, the young people are, well, we don't see it anymore because we don't see cigarette smoke everywhere, but you just need to drive behind a couple of cars on the highway and all of a sudden you see this big puff of vapor coming out the window. So people are definitely smoking, and the nicotine addiction is still very real.
And it's entering a lot younger group of people, which is the issues that they're having in the US. All these strawberry cheesecake flavors and, cotton candy, it's very appealing to the youngsters. So that's where they're having their marketing issues. But yeah, it doesn't help that the illicit vapes are there anyway, doing the same thing.
Yeah. Yeah, look, I mean, you can debate the morals of the product that they're selling and whether kids get hold of it or not. But the fact of the matter is people are smoking, people are consuming nicotine. These companies are going to continue producing it in the most healthy and socially acceptable form that they can. And it's going to continue over the long run. I don't see any other questions. So to summarize, yes, like we said, it's a conservative, I like Ross's way, conservative high dividend player with oh, sorry, somebody's unmuted. That's Nolan. Thanks, Nolan. Yeah, a conservative high dividend payer that's currently, from a share price point of view, way undervalued. From a technical point of view, still stuck in a bit of a range, but maybe worth a nibble. And as I've said, to include it into your portfolio is a bit of a rand edge. Not a bad idea. We'll see you guys next week. Sean, do you know what's up next week?
PPC, I think.
Sorry, I didn't hear that.
PPC?
PPC,
Cement.
okay. Okay,
Yep.
so we're going to Pretoria for some cement. Cool. We'll see you guys next week. Thanks for joining us today. I hope you have a fantastic Thursday, and thanks for your insights, Ross. Cheers, man.
Thanks, guys.